Welcome to this YouTube channel of K-Leaders. I'm Francis Chen. In this episode, I would like to continue talking to you on capital restructuring. In the last episode, we talked about subdivision of shares and consolidation of shares. In this episode, I would like to share with you the other forms of alteration of share capital, including reclassification of shares, variation class rights, redenomination of shares, and capital reduction. Taking the example of having $100,000 Hong Kong capital divided into 10,000 ordinary shares. If you want to reclassify your shares, you will involve a creation of one or more class of new shares. In this example, we are creating a new class of redeemable preference shares. And in this class of redeemable preference shares, you can imagine that the dividend rights will be different from the ordinary shares. At the same time, when you create the new class of shares, you may also want to increase your pair capital. If so, there will be another set of procedures you need to follow. Variation class rights is normally attached to a reclassification of shares. In the example, we create a new class of redeemable preference shares, and the class rights will be different from that of ordinary shares. So what are the class rights? These rights would include different voting rights, different rights to dividends, and rights to a return of capital upon writing up. Remember that members of that class of shares must give consent to the variation before you can go ahead. And any dissent member may raise objection to the court if they are not happy with the variation of rights. If your share capital is now in Hong Kong dollar currency, you want to change it, then you may want to denominate the capital into US dollar currency. If you consider that the existing paid-up capital is more than what you needed, then you may want to reduce the capital. In the example, we have $100,000 capital. You may want to reduce it to $50,000. This will mean that there will be a decrease in shareholders' equity. How to achieve this? You may do a share buyback or by going through the court-free capital reduction. Share redemption is an option if the shares are redeemable in nature. In this example, the ordinary shares is not redeemable, so share redemption is not applicable in this case. There are various forms for you to vary your capital, and there will be different set of procedures and reporting requirements. I would advise you to consult your company secretary before you go ahead. In the next episode, I will share with you in more detail on how to reduce your share capital. So please stay with us and see you next time. Bye-bye. Thank you for watching this video. If you like it, please give us a like and subscribe and share with your friends. Look forward to your continued support. See you next time. Bye-bye.